Hello, hello, and welcome to Alphas T minus at 51%. Let's go look at that chart. There it is, 51% for T minus. T minus is right here, and we are in dipper low. We are dipper low because it completed the third ratio close, which was right here at I think it was $135. No, it has to be less than that. But the bottom line is that we know that we are above. We closed above the line right there. That's the qualification. We initiate dipper low, which started here, and then it went here, and now we're looking for a dipper low up here and get out somewhere up in here. We do have still more than six. We have almost the whole 90 days. Yes, we do. August to July, July to June, June to May. That we still have 90 days left in this option, but the objective is to get either take profit at a dipper low or get RI 100. And we've seen a couple of RI 100s in the last few videos, so we know they exist, we know they're out there, and we're just going to keep looking for them. Okay, that takes us down to IAU. Now, IAU is a bit of a different setup, and that is because IAU was not from the lost leaders list. The IAU came from a scan that we did in class on the Stochastics Weekly. No, this was back in March. So this would have been Stochastics Uptrender. There are four classes of stochastics that I'm studying on. We are on the fifth class. There is a there's a fifth class coming along. So we're on the fourth class right now. Yes, my laboratory just keeps working on these things, and we're going to work down to finding the best tune one to use. So, with that said, we are dipper low here. Now, we're dipper low here not because it closed above the third ratio. The third ratio is way up here. We are in because we are less than 60 days away from expiration. So we are on rule number 4 of the exit rules. Or is it rule number 5? Rule number 5 of the exit rules. Rule number 5 of the exit rules is less than 60 days out, we go to dipper low. If this option does not exit prior to it doesn't exit soon, and we end up going into June, which is now only 30 a little over 30 days away. The bottom line is that then we will go to dipper low. We will go to dipper low if we are 30 days or less than the out. So and then this one here does not owe us any money. This is going to be a pure. So any profit that this left over is going to be a profit. It would be a profit trade, and it will be a winner circle trade. Winner circle means that it doesn't owe us any money, and it gets retired off the field because we are focusing on the Alphas loss leaders list, which is approximately 45 thereabouts. Okay, so that takes care of IAU. Now we are going to Walgreen, and we're going to Walgreen for the reason that Walgreen is in a is also in the last 60 days. Yes, even it hasn't achieved this profit, but we are running out of time on the option. When we're running out of time on the option, this is a July, and July is 60 days away, and this is a 60-day. We're 60 days away as of Sunday. So on Monday's close, we went to dipper low, and the dipper low is right here at 52.40, right there. In fact, we got to put in the price line. Yeah, a little bit of a lesson there. How do you do a price line? Come up and grab your price line tool, grab it, right click, edit. Come in here. I'm going to put 52.40. We're going to go to we're here on the 14th, and we anticipate the trade will exit in 1 week, and it's got the green because it is in profit. And we're going to come up here and put in the account. If you have several accounts, it's good to always put in what account. The strategy, STO, the directional trade of the option is a call, and the condition is exit. Okay, that's how we do that, and we hit OK. And now we have our label right here on the price channel, on the price level right there. So what we're anticipating is we have a nice little upcline here. We might get some more movement out of this and be able to maybe even cross into break even. Right now we're at $35 short on on this present trade for Walgreen, and Walgreen does owe 17.99. So any kind of profit left over will help bring this rock become pebbles, pebbles become profit, and profit does pay back. Alrighty. With that said, we are now working on going on down to the scanner, and we're going to go here to the scanner, weekly downtrend. That's it. And we'll go ahead and now this was a scan I did earlier on the open options. Then we came up with these two positions. Not recommended. Why? Because the volume is extremely low. I only did it as a test to see if the scanner was functioning well. That is one of the tests you have to do when you build scanners. You need to go and test it not to your watch list, but to the all category, all optionable, and then the position of how much money you're willing to put in. So right there. So once you have your scanner conditions written down here in your program, then you can change your budget range of how much you're going to do. So we're going to go weekly downtrend, and we're going to go back. We're going to go to the alphas. Now this is personal, the personal watch list right there, and alphas. And you can see the alpha conditions is 1 to 400, and it's going to be a downtrend, and we're going to scan for it and see what and there is nothing available. Now, why not? Because this one here is looking at two major conditions. What was the weekly stochastics direction for the last couple of weeks, and then what did this say? The two must correlate. This is a correlated um, scanner, and there is also known as a divergence scanner. I have not gone into divergence scanners. I have taken several courses on it, have a good understanding, and then I'm building the scanner for it. Because here's my situation. My situation is this. Look how many scanners I already have in my portfolio, in my corral. It's like, oh my goodness, how many cars does Jay Leno have? 100. How many cars can he drive at any time? One. How many roads can he drive at any time? One. So I need to start paring down and cleaning up the scanners to see and identify which ones are working. So that's just for the downtrend for the alphas. Let's go look at the uptrend for the alphas, see if there's anything there. I don't expect it, but you never know. You have to go look. So that's the downtrend. Okay, that was a downtrend. So let's go see if we can find the uptrender. Oh, I loaded both at the same. I both on the same screen. So let's go ahead and load it. We go load, personal, all the way down here is stochastic release uptrend, 45 positions for the alphas, and do it. And nothing. So what does that mean? That means this, that we are going to preserve our capital of 5,526 until such opportunities present themselves to get into a trade. And we are in the middle of the month, so we still have 2 more weeks to work on the scanner before we go to an Elvis shift on June 1st. So with that said, let's go review the numbers. We have 71.32 on the capital minus the 55.33 as a profit. Divide that by the 55.33 for a percentage, and we are 28.9% year to date against the SPY. Let's go look at the SPY. So we come to the SPY, type in the SPY up here, and right there. And the SPY is at 10%. 10%. And where is our position? 28.9 year to date. And they are 10% year to date. We are nearly 3 times ahead. And with that said, we'll conclude today's report for the alphas challenge, but the market T minus at 51%, stochastic at 28.9 versus the SPY's 10. And with that, I thank you very much for stopping by and checking it out.